Good morning, everybody. A very, very warm welcome back to another Taurex and Atmos live stream here on this Monday morning. It's a brand new week, of course, which means brand new opportunities, brand new trades, brand new a fresh wave of volatility, hopefully, which is going to create some amazing trading opportunities for this week. And this is our weekly preview stream. So we're going to be breaking down all of the main events in which we need to watch out for. Over the last couple of weeks, we haven't really needed to look into the economic calendar too much because obviously the talk of the town has been Trump tariffs and trade wars and recession, and it's sort of put a it's sort of devalued the impact of the normal events that we see. But now I think we're moving into a time where we understand and we know the situation really when it comes to Trump tariffs as much as we know until some crazy headline comes out probably whilst I'm on stream, and you can't really odds that. But we're going to break down and we can have a look today more at the actual events because the weekend wasn't too damaging. The weekend wasn't too crazy. There was some headlines from Trump, of course, with particularly with the trade war with China more so rather than the other countries, because we know there's been a pause, and that was really the talk of last week about this 90-day pause on tariffs. So yeah, hopefully we can find some good opportunities. I do apologise as well for not streaming on that Thursday, on that US inflation day. My intention was to stream. We was at an event, and it was an amazing event, FX Pro MENA event, and we got some amazing content, interviews with some fantastic traders, which we're going to be releasing. It's now in with the editing team, so it's out of my hands, but we've got some amazing content. So if you are following our social medias, then you're going to see some really cool interviews from prop traders, from traders, industry professionals, those sorts of things. So I'm really much looking forward to that. The Wi-Fi at the event was just too bad for me to stream, and I was going to come on, and it was going to be horrific, to be honest. So yeah, I had to leave that one. But US inflation did come in quite soft actually, overall. So yeah, and you see the dollar is getting absolutely hammered. So hello to everyone who's on the stream today. It's good to see you all. We've got Lara on the stream today. Very good morning to you. Bobby, hello to you. New week, new opportunities. Yes, indeed. Jeanette, hello to you. Good to see you. Thank you very much for tuning in today. I hope you're doing well. I hope everyone had a good weekend. Osama, hello to you. Good to see you as always. And we've got Curtin on the live stream as well. Very good to see you all. This is a pre-recorded session as well. It's a recorded session, so I know a lot of people do tend to watch on catch-up if, it's 8 a.m. in the UK, so I know we've got some UK viewers that tend to watch later on. Hello to you all as well, and hello to everyone who is on the Discord channel. I can see some people on the Discord channel. It's very good to see you all, and thank you for tuning in. So, where should we start? Let's start with what we saw over the weekend in terms of the market news and anything that was said which has moved the goalposts in any way. Jeanette, yes, it's great to see you live again. I've been watching the catch-up. Yeah, thank you very much. And I know you tend to... I don't know what the time is where you are in Australia, right? So, yeah, thank you very much for tuning in. I'm sure... Now you can watch me live. It's better to watch live because you can ask questions, and anyone who wants me to cover any particular markets, please drop that into the chat section on YouTube or on Discord. I've got both screens open, so you can ask me any questions or any markets in particular that you want me to cover, or any questions on what's going on this week. Okay, so over the weekend, sorry. As I said, the gaps weren't too bad. Actually, the gap was higher on the stock market slightly. So we'll have a look at some of those gaps to see if there are any potential scalping opportunities for a Monday. But the main thing that I was looking at over the weekend was nothing that we don't already know, really. But Trump said that basically no one is off the hook, as he suggests further Chinese tariffs. I'm not really surprised about that. The markets haven't taken that news too badly, which could suggest that a lot of the current badness, if that's even a word, is already priced in, which potentially is a good thing for anyone who's buying the dip, particularly in the stock market at the moment. But great summary here on this website, and I'll drop the link. In fact, I'll just copy and paste this and put it into the Discord channel so people can read it as well. Where is it? Taurex. And if you do want to join the Discord channel and you are watching, just feel free to scan the QR code on the screen and you can come and join us, where I sort of talk markets and give updates. But Donald Trump has warned that nobody is getting off the hook for unfair trade balances, suggesting that further tariffs could be expected. The White House had on Friday excluded smartphones and computers from its import taxes on China, but in a post on the Truth Social, he suggested that this would be short-lived, saying that they would be moving to a different tariff bucket. So basically just, this is becoming quite sector-focused. So this is a good thing for the tech sector, with the fact that we're going to have less tariffs there. Chinese officials had earlier called on Trump to completely cancel tariffs. Ugh, not going to happen. Urging them to take a big step to correct its mistakes. Chinese president arrives in Vietnam today as part of a trip he is making to 3 major manufacturing nations in Southeast Asia. And Trump's back and forth on tariffs last week caused major swings in global financial markets and raised fears about the impact on global trade. This is the big one, right? Because what I've noticed in what we're seeing is we're seeing some massive ranges and some wild swings in these markets, right? So we're seeing days of like, it's almost becoming normal that we're seeing days of like 5% downside followed by, 10% upside followed by 6% downside. So it goes back to my point, if you're trading these markets, right? And I've said this to a lot of people who said like, how do I navigate these sorts of markets? I always say to them, when you've got markets like these, and it does happen in time, and you get these big wild swings, is I try not to hold on for trades for too long. You can do that in various ways, and one of the best ways I think you can do it is either taking partials. So like you say, for example, you had a 5-lot trade on, if you get into profit, think about how you can close some of that position to lock in some profits, and also think about protecting your losses in these times, because you could go to bed, and I'm sure some of you may have had this, you could go to bed and you're in a great profit, 3% profit on your account, right? And then you wake up and it's hit your stop loss. That's the sort of nature that we're in, and it can really, really mess with you mentally, and your psychology can take a hit from it. So if you move that stop loss to entry and you take partials, you're just protecting yourself from any unexpected twists and turns when you're not on the screens, right? So that's what I would suggest. Amir, hello to you. Good to see you. Thank you very much. Amir is a fantastic trader who I met last week on the at the event that we was at. It's good to see you, Amir, and thank you very much for tuning in this morning. I hope you're doing well. Okay, so that was really the news over the weekend. So when we look at the charts, okay, what we can see, let me just go on to my streaming setup, which is here. You can see that, can't you? Yes. As you see, some gaps higher on from Friday's close into Monday's open. Very, very slight gap, right? But we can use these gaps. So here's Friday's close. To be fair, here's Monday's open, but there's still a gap here. I know some of you watch the streams like to use some of these gaps as potential support areas. So when it comes to sort of Monday's trade, obviously we had that. This move here was the pause announcement, the 90-day pause on tariffs, apart from for China, and as you can see, we sort of retraced about 50% of that move, but since then have been grinding back higher again. So I don't love the idea of buying the stock market. I still think times are really uncertain. But if we don't hear anything different, then there's no more bad news to price in just yet. There is obviously uncertainty around recession, etc., which makes I think buying indices a slightly difficult trade, a slightly confusing trade. However, gap from over the weekend, you could, even if we just targeted sort of these equal highs at the top here around 19. This is on the Nasdaq, because obviously the Nasdaq has popped a little bit more because of the announcement of the fact that sort of the tech sector is slightly more protected from the tariffs. Even if we just targeted the top of this high, which was last week's high, it's a 3.6 to 1 trade, okay, from this gap. So it's, for me, it's worth 0.5%. It's worth, I'm always being careful about my risk in these situations, but this could be a good area of support for the Nasdaq. Laura, is it safe to trade on the open? On the open of what? Sorry, on the open of today. You mean of the US Open? Thank you very much, Amir. Appreciate that. It's very very kind of you. So that's potentially one trade idea for a Monday. You can see as well, like on the US 500, not too much. I wouldn't say that's the best gap to trade. And on the US 30, there wasn't really a gap at all. So I do think this is a good potential. I would say it's more of a scalping opportunity. So I'd probably lower my risk to about 0.5%. But that could be something that we could look out for from just a purely technical play. Yeah, I mean, you're going to get volatility on these opens, Lara. You're going to get volatility, right? We're going to see volatility. You can see, if you want to know if we're going to see volatility, just look where the VIX is. It's up at 34. I know we have fallen from the highs up at 50, but you can see the volume in the candles on the VIX. So volatility is here, right? And I think it's here to stay, which is a good thing. It's just about how we manage that volatility very very carefully. Okay, looking at the oh sorry, no, I wanted to show you just from a let's go on to the daily. Here we go. You could, because you can see you can see the daily candles, right? They're massive. So there's no reason why that from this fair value gap, if you didn't have your take profit at the last week's high, what if we targeted a test of the 200-day moving average? Then you're talking of a trade which was 3.5 to 1. We're talking 11 to 1 here. If I make that a bit bigger, so there's a 1 hour fair value gap, targeting the test again of this 200-day moving average. It's an 11 to 1 trade. Okay, yes, we are bearish, and from here I expect resistance. I don't believe in the medium term that we've seen the bottom in the stock market, but that is going to depend on whether we see a recession or not a recession. So, yeah, I think we could get into a profit on this trade at least, and then potentially look at moving that stop loss quite aggressively. Okay, let's have a look at the US dollar. If I go onto the dollar index now, I want to talk a little bit about the US dollar and some of the reasons in which we've seen the move lower that we saw, which I have to say caught me by surprise. And I've done some research into this, and I've had a look, because tariffs theoretically are inflationary, right? That means inflationary fee, and I've taught people this before, when you have higher inflation in an economy, that feeds into currency strength. So in this situation, US announcing all these tariffs, you would think the logical step would be US releases tariffs. That's seen as inflationary. Jerome Powell has said numerous times that this is an inflationary economic measure. That should be dollar strength. So why are we falling so much in the US dollar? And in the research that I've done, and my own opinion as well, is what I think's happening here is these tariffs have meant that the US has lost some credibility, and as a result, the confidence and faith in the US economy has faded over the last few months, should we say? When you have a situation where investors lose faith or have some uncertainty and some doubt about a particular place because of the tariffs, and they're not sure this is the right measure for the US, even though Trump says it is, investment flows come out of that economy, and therefore we've seen investment flows out of the US dollar, and that's why we've seen such a move lower. I mean, you can see basically the breakout of this channel, how beautiful that retest was, and then since then it's just been downside, downside, downside. Now the thing, and it would always be a where can we see the dip in the dollar? Where can we buy the dip? That's what we've been accustomed to, because the dollar is, typically like the king currency in a way. However, we broke below such a huge level last week, this 100 level. Okay. That suggests to me that in the medium term, not necessarily saying over the next couple of days, because we have created a new low, so that you could argue that, okay, at some point we're going to base out and we're potentially going to, create our next lower high before we see a move lower. But I know that break below 100 here was a really significant one. And so for someone who's notoriously been a dollar bull, I believe this breakdown below 100 is a sign of potentially more dollar weakness to come, should Donald Trump continue in his aggressive nature when it comes to tariffs? And then should we see a recession? Yes or no? Who knows? We might do, we might not. Osama, I'm not sure, but I'm hardcore bearish on the US 30. Yeah, I saw a few polls, and it's the first time probably the first time since the COVID times that we saw on this poll that I saw a few thousand votes that more people are now bearish on the stock market than they are bullish. So yeah, I believe you. I'm just saying from a perspective on a Monday morning, we saw a bullish gap over the weekend. Could we try and capitalize on that potentially? And the US dollar, well, okay, there is a situation here where we might consolidate for a bit. This might be a week of consolidation, to be honest, but I have my eyes set on potentially some more downside. Does that mean gold will continue to go up? It does, yeah, it does. That is pretty much what it means. And last week, my weekly preview video on social media covers gold, because obviously we saw last week that massive move, that next leg higher, pretty much up to 3,250, and now you have to say, okay, so here's the next leg in gold. Okay, pretty much what happened if we follow the price action from back in the beginning of the year. Move higher, slight pullback, new high, barely any pullback, new high, took out this low into this imbalance, and then boom, there's our next expansive move. This is where I think people have to be really, really careful. The reason you have to be really, really careful, and I said this before, is that now we've made that next bullish leg. You have to realize that markets don't move in straight lines, and so now we've come up to this new high. What I'm looking for is either a period of consolidation, a pause before the next move higher, or a move down into some key areas, right? So these key areas, you could use Fibonacci, you could use the 38.2, or you could look for a deeper correction down to the 61.8. So either one of those levels is a good one. And if I drop down onto the 4-hour time frame, probably not going to get there, to be honest, but we have got, of course, for you smart money concept traders, the order block is down at 3,000. Okay, so we could see a situation, if we see a situation that we get a deeper correction, 3,000 is a good area. It sort of marries up with this demand zone as well, and then we could see that. So yes, I do believe gold in this current situation could continue, especially with the dollar weakness. The time where I turn bearish on gold is a time of recession. I spoke about that last week. An actual global recession, I don't think, is going to be positive for gold. I know gold is seen as a safe haven, but that's in times of medium uncertainty. In times of extreme uncertainty, you actually may see physical demand for gold and commodities alike fall, and therefore we may actually see flows out of gold. So just be very careful on that. At the moment, I'm not calling recessions. I think people are predicting a 60-70% chance, or 60%, 65% chance, something like that. So we're not there yet, in my opinion. So I do believe that gold can continue higher. I just believe that I'm not looking to buy it up at 3231. I'd rather wait for the structure to form and for a bit of a retracement first. Wow, Osama has just said that gold is going to go to 4,500. But in what time do you think that's going to happen? Because that's some prediction. And after 4,500 is all the way up here. I had to squash the chart to find that. When do you think that's going to happen by? Not this year. It can't be this year. Okay, right. I just want to spend some time now talking about some of the events that we've got planned in our calendars. Of course, some of the events or statements that come out or the tariffs they're not in our calendars as such. So you have to sort of be on the news, following news, or I can update people in the Discord channel when I get things, but I'm busy as well, so I'll try my best. Okay, Monday. just quickly go to Monday. In terms of Monday news, we're okay. There's not much. There's nothing really to worry about in terms of high impact. I only really focus on high impact news. As we head into Tuesday, for those of you that trade the pound, and we will take a look at the pound versus the US dollar, and probably cable was the best one to look at. We do have some employment statistics report out in the UK tomorrow morning, so we'll get an idea of the unemployment rate, claimant count change. That should keep some volatility in the pound. As we head into Wednesday, we get some data out of China. So we get their GDP figures. Forecast is 5.1%, previous 5.4. The industrial production is expected to fall as well. I would say that if we do see that, obviously we need to dive into the figures a bit deeper just from a surface level. If we do see some weaker China data, that could feed into some more risk-off trading from a global perspective with the power that the Chinese economy has. So let's see. And then as we head into the rest of Tuesday, again, more UK data, CPI, inflation. So this could be a good week to trade the pound because we've got volatility already in the markets, but there's actual events coming out in the UK as well, in the form of the employment report, unemployment, and also in the inflation rate as well. So that really puts I'm going to try and get some analysis in on the pound in a minute. And then we have retail sales out in the US. 0.2% is was the previous forecast is 1.3%. So actually an increase in retail sales figures. Retail sales can be the actual figure we get from retail sales. I've seen often is wildly different to what the forecast is. So I'm interested to see what that is. 2035. Osama says 2035 is when we see gold up to 4,500. Very interesting indeed. Okay, we also then have the Bank of Canada interest rate decision on Wednesday afternoon, for me anyway. So that we're expecting the Bank of Canada to hold rates at 2.75%. They've probably done a lot of their cutting already. So we'll hear anything out from the press conference. I know obviously there's been a bit of tension, obviously quite a lot of tension between Canada and the US. Normally like that with each other, but now very much distancing themselves from each other with the current situation on tariffs. So it'd be interesting to see how the Bank of Canada responds to that in the press conference if they decide to comment. But the main event for me, the one that I'm looking for more than any of the ones this week, more than because we've got ECB out the following day, more than any of that, it's this one. We have a speech from Jerome Powell. So he's expected to speak at the what's it called? Chicago. He's in Chicago, I think. Yeah. So he's expected to speak about the economic outlook at the Economic Club of Chicago on Wednesday night. I think now more than anything, the language that Powell decides to use in response to the policy implemented by Donald Trump is going to be one of the biggest market movers. It's now, we know tariffs are here. Whether they stay, whether there's a deal, whether they're more aggressive, whether they're reversed, it's causing uncertainty around any of the outcomes, right? So how Jerome Powell decides to answer questions on it and respond, and how the central bank responds to it, is very, very important. If he continues to show concern about the impact, the economic impact on tariffs on the global economy, if he continues to show that sort of concern, I know he's not going to come out and cause panic, but it just means that we still remain in a risk-off environment. It just means that no matter what sort of, rallies that we see in the stock market, for example, I still think sellers are going to be present if Jerome Powell still says there's uncertainty around the economic outlook when it comes to tariff situation. If he comes out and is a bit more bullish about the economy, and says things like, the economy still remains strong, the labour market's still holding up well, that sort of thing, then that might just sort of scave off the bears a bit longer, and therefore it might help with that Nasdaq trade, for example. So it'd be really interesting to see what language he uses. And obviously we've got to 48 hours and over 48 hours until then, so Trump could come out and say anything in that time, to be fair. Okay. And then as we head into Thursday, we have a ECB interest rate decision. So we're expecting the ECB to cut rates by 25 basis points. And again, another press conference, which is going to, it's these press conferences are now more going to be just going to be asked questions about tariffs, I reckon. So I'll be interested to see how Christine Lagarde deals with that and how she responds to that herself as well. So that'll be an interesting press conference to listen to if you are into the fundamental events and any of the language that's used or any big statement that's used from any of these central bank leaders. I will update you. I've got a bit more of a free week this week, so I'll be a bit more on the ball when it comes to the language that's used. And then as we head into Friday, don't think we have anything. So from a US standpoint, we've been used to, you know, inflation, tariffs, Fed, etc. It's actually a little bit of a slower week in terms of news events. Now, this could change very quickly. However, I think that means that we could have a bit of a slower week in terms of volatility. I say that not with great confidence, but you see how the dollar is at fresh lows, the gold market's at fresh highs. Just be careful that you may get caught up maybe in some choppy markets this week as the structure starts to form in these markets. It's just about remaining patient. Okay, it's just about trying to remain patient and wait for that high quality setup that you've got. That would be my main advice. Okay, are there any markets that anyone wants me to cover? Please let me know in the chat section now if there's any markets in particular that you want me to go through. Drop the market and the time frame if you can in the chat section, and I will go through that market now. If not, I'm going to take a look. Oh, I'm going to take a look at cable anyway now and dollar yen. Okay, cable. WTI, of course, probably yes. I know. Yeah, I'll take a look. I'll take a look at WTI for you. No problem. Okay, right. Let's take a look at cable then. I'm on the 4-hour time frame. It's on your watch list too. Okay, so dollar yen, of course. Yeah, I'll take a look at dollar yen. Dollar yen, cable, and oil. So cable is an interesting one, right? Because what you can see, well, first of all, what I've noticed about markets in general, when you go onto these charts, as if you notice that, like the size of the candles, right? If we just follow that all the way through, boom, you see these wild swings. Like you can see them, just with your eyes. I don't even need to draw any fancy analysis on there. You can just see the volatility and the big ranges with your eyes. So as we approach 1.32 in cable, this is last week's high. EU, hello Dan, hello, good to see you. Hope you're doing well. EU on the 4-hour and the daily. Yes, sure. We've streamed for quite long today. As you can see on cable now, we're approaching last week's high. I'll be very careful buying cable here as we approach the top of this range. So with the fact that we're seeing these wild swings, here's the current structure, right? It's between 1.32, 1.27, it's like 500 pips, I think. So if I was going to trade this, yeah, 506. If I was going to trade this, what I would do is I'll set myself an alert, and I will do this. I'll set myself an alert at this high, and I'd call this GU buy side liquidity. Okay, so basically what I'm saying here is that at this high, we've got probably quite a lot of people that have sold the market here that have their stop losses above this high, and probably a lot of buy trades above this high as well. So lots of liquidity above 1.32. There's two ways in we play this. The first way, which is my favourite way, is we wait for the market to interact with that high and we see a liquidity grab and a close back inside. When we see a close back inside, the risk reward to go short, let's say the trade looks like this, is amazing. That's why I like that trade. Okay, so that's the first way in which I'd play GU this week. First of all, wait for it to hit that high. See if we get a liquidity grab. If we do, try and play the liquidity grab, even if we had a move down into like the 50%. You know, down here at 1.3 or 1.296, you're still going to get yourself in good profit. You're still going to make some money if it goes that way. That's the first way, my favourite way. The second one is that the dollar continues to get hammered this week for whatever reason, and we see a break above 1.32, and then we need to wait for a pullback to then go higher. And then I think we'll be talking about, if I go on to the weekly, we'll be talking about targeting this weekly high, which is, when was that high formed? September last year. We can target probably that high. That's my opinion. That's what I think we could see. Okay, that's that. WTI, I think, remains bearish. Why does it remain bearish? Well, because, as I said last week, gone to the daily time frame, I know I've marked this a few times, so I do apologise if I'm repeating myself, but you can see that support, which has been support for quite some time, sort of between that 65 and 70 area. We've broken through it. That's a bearish move for me, and therefore I believe that we'll see some more downside here in crude. Where we get that from? Sorry. Where we get that from? Again, last week's high, liquidity, set an alert, Bobby. Wait to see how we react with this high. Do we threaten to close above and close back inside? If we do, that's our ammunition to go lower. I believe that crude oil in this current environment will make a move towards 50. That's my prediction. And we could get that from here. The other scenario for crude is that we actually see a break of structure. And when we see that break of structure, we wait for the pullback, and then maybe we can come and target this gap up at 70, where I think we could say that's potentially the ceiling of this market right now. So that would be a good target for any buying opportunities. On on dollar yen was the next one. I'm actually in a sell on dollar yen, I can't lie, and I'll show you the sell. Dollar yen, trend rider. Okay, dollar yen. Here we go. So, this is one of my mechanical strategies, which I will be releasing when I do the academy, when I finally get time to record the academy. I have planned it. It's going to be in this academy as well. I know a lot of people use the trend rider. If you've been following me for a few years, well, the trend rider has created some amazing selling opportunities on dollar yen ever since the crossover on the 3rd of February. Test here, test here. Okay, you probably would have been stopped out on this one. Pretty much almost like a fresh cross. Okay, and I entered here. This was basically my trade. $140 pip stop loss. Where do I think dollar yen's going? I think dollar yen's going to hit 140. I actually said a few weeks ago that dollar yen would hit 140 by the end of the year, which looks like a bit of a conservative trade now. So in terms of dollar yen for me, I'm in this trade as it is, so I'm not looking to enter anymore. However, for those of you who want to trade the trend rider, you can still see there's room in this ADX, which is our trend indicator, for a move. As you can see, the trend is building. That's what this red line going up means. It means the trend is building. And therefore, I would like to see a move. But for anyone who's not in dollar yen sells, maybe we see a move up to test this EMA 12, because this is an EMA 12 and an EMA 36. And then potentially I'll look to scale into the trade if or when we get a test back of that EMA 12. So that's why I'm looking at dollar yen downside, because the trend is very much our friend right now, and we can see there's still room in the ADX to build. EU, Dan, EU on the 4 hour, the daily. Again, the trend line is, for all the dollar pairs, the trend line has been amazing. What a buy that was on EU there. So, yeah, I mean, sorry, on the 4 hour time frame, I mean. There's a trend rider shaping up, but you have to remember that the ADX has already made a move up towards 40, so we're in a strong trending state. So as long as the ADX can stay below 40, then maybe 1.13 could be a good trade. However, let's just go back onto my normal template and try and find something a bit clearer on EU. Okay, tricky market, this one. Very, very tricky market. Dan, I don't like EU. I certainly wouldn't want to be buying it up here, because this looks like we're threatening to, create a period of consolidation. Maybe. And I don't really want to get stuck in those times. Lara, those EMAs were a 12 EMA and a 36 EMA. I will release this strategy. Yeah. No, EU. I'll be honest, Dan. If I give you some analysis on EU, it would be pretty. I think potentially we could be in for just a period like this for a bit. So yeah, there's the monthly 200 EMA on EU. Look at that break above the yeah. I don't like it, Dan. I don't like it, mate. I think potentially we could be seeing a period of consolidation in EU for now. So yeah, sorry, I don't like to not give a sort of trade idea, but I think GU looks a lot stronger. And oh, sorry, yeah, I was looking at the SMA. I'm looking at the simple moving average, not the exponential moving average for the 200 on EU. Curtin wants to have a look at the DAX. The DAX. Right then. So, the DAX. First thing I want to draw is a little bit of a trend line, because look at this. Break below this trend line. We even had a break below multiple. I'm not a massive trend line trader, but when you look at the daily and the weekly time frame, they do actually work quite well. To be fair, a lot of people, because it's just a trend line, people don't really give it the time of day. But it's not that bad. Yeah, I would sit on your hands, Dan. Maybe on the stream I'm doing another stream on Wednesday. We can have a look at GU, see if it's moved a bit more. So Curtin, with the DAX, for me, I think this is a good selling area. Maybe at around 21,400, maybe something like that. How would that look? Probably would look something like this. Going to drop that in the Discord channel, actually, because I like that a lot. Trade ideas. DAX from stream. I've dropped that in the Discord channel for you. I think it's a really clean, simple trade. It plays into the risk-off narrative. It's got a bit more room for upside, so maybe Monday, Tuesday, we see some upside. But then I think the sellers will probably, potentially, could be stepping in. Trade ideas. There we are. And what do I think about the VIX? Well, I think the VIX, as long... okay. If there aren't any announcement of new tariffs this week, or any more... announcement of new tariffs, escalation is what I meant to say in the situation. I think the VIX could see a move down into the mid-20s, which I think means that it could be a temporarily bullish week for stocks. I'm not sure how long that will last. So the VIX is a wild one, right? I mean, you can see. So maybe a move down to just below 30, but then I think we might see some more balls come in. Okay. Amazing stuff. That was your weekly preview. So a rundown on the markets right now. My overall opinion is if things don't escalate this week, we could be in for a pause period in volatility. I say that not with great confidence because the situation could change. However, we shall see how we operate this week. But it should be a fantastic week anyway. And as you can see, there's plenty of key levels to target and market opportunities. I'll be a lot more active this week as I've got a full week at work sort of thing, not at the event. So I will be around in the Discord channel should anyone need me. Please just drop any messages that you have or any questions about the markets and I'll be more than happy to help. Okay, good stuff. And finally, good luck to those trading this week and I hope it's a very successful one for you. I'll see you live again on Wednesday for another market update and maybe for see how the trades that are planned this week, whether any of them have come to light. And we'll do a bit of an update then. So trade well, trade safe, take care, and I'll see you all very shortly. Thank you.